dollar is mildly firmer against other major currencies as the week starts. Asian equities didn't follow the rebound in US stocks on Friday and are broadly lower today. Investors are clearly cautious ahead of the highly anticipated Jackson Hole Symposium this week. Fed Chairman Ben Bernanke's comment that there is scope for further action by the Fed to ease financial conditions raised the expectation that he's to give a concrete message about QE3 during the event. But investors hesitate to jump in at this stage. Nonetheless, we'd like to point out that the price actions in Euro, US dollar, Sterling, US dollar, Swiss franc and US dollar, Japanese yen are looking corrective so far, and thus, more downside is still generally favored in the greenback ahead. Trading in European majors is also quiet despite hope that the European Central Bank would kickstart the bond buying program in September to cap yields within a certain band. But that's not likely to happen at the ECB meeting on September the 6th, but rather, after the German Constitutional Court's ruling on the European Stability Mechanism. Bundesbank Chief Weidmann continued to voice his opposition to bond buying as he urged that, the risk that central bank financing can be addictive like a drug. He also criticized that, such policy is too close to state financing via the money press, as he emphasized that the ECB shouldn't guarantee that states remain in the euro area at all costs. After meeting with Greek Prime Minister Samaras, French President Hollande urged Greece to demonstrate again the credibility of its program and the will of its leaders to go through with it to the end, whilst ensuring it's bearable for the population. Hollande will need to receive the Troika report at the EU summit in October before making a decision. And, once the commitments are confirmed, Europe has to do what it has to do. German Chancellor Merkel shared the same position as she stated last week that she has to wait after the Troika's report before making decisions on whether to give Greece more time on its austerity measures. She wanted evidence to show that the debt-ridden country is committed to reduce its deficits. In the UK, Bank of England chief economist Dale wrote an article to defend quantitative easing from criticisms that it hurts savers. Dale said that, the suggestion by some commentators that savers and pensioners would be better off if interest rates had not been cut by so much is misconceived. He cited two reasons. Firstly, the economy would be in a far worse state without quantitative easing and the bank rate at 0.5%. Secondly, by lowering long-term interest rates and stimulating the economy, quantitative easing has helped to prevent asset prices falling by as much as they would otherwise have done. And that helped to protect the value of savings and wealth invested in financial assets. Economic data is light today. German import price rose less than expected by 0.7% month-on-month in July. Looking ahead, IFO will be the main feature. The German IFO business climate is expected to drop slightly to 102.7 in August.